Namaskar. We will start program now. Very warm good evening to all. Friends, today we have with us respected chief guest CMA Dr. Ashish P. Thate sir, council member and chairman corporate law committee ICI. He will join very soon. Special guest CMA Niranjan Mishra sir, council member, chairman committee of cost and management for public and government services ICI. Today's resource person CMA CS Aravinda Acharya sir, former company secretary IDCOL and practicing company secretary. Vice chairman cum treasurer of the chapter CMA Santanu Kumar Rao in absence of chairman CMA Himaj Mishra, secretary CMA Surya Narayan Tripathi and all other professional colleagues in the managing committee. Respected senior members, past chairman of chapter and ARC, Central Council member, Regional Council member, esteemed members of the chapter, invitees, guests, joined today on the occasion of observance of the National Corporate Law Month, March 2022, as declared by our institute. I, on behalf of the Managing Committee of ICI Bhubaneswar chapter, warmly welcome you all to the today's webinar on legal provision of directors, that is for observing by the chapter to commemorate the National Corporate Law Month, March 2022. I also convey my hearty thanks to chief guest, special guest and resource person on the occasion for acceptance of our invitation. On 23rd February, we received communication from Corporate Law Committee of our institute, led by CMA Dr. Ashish P. Thate sir. This is for information that just before declaration, we had conducted a seminar cum webinar on the theme Amendments in Companies Act 2013 Accounts and Audit on 20th February 2022. So observation by the ICI Bhubaneswar chapter is last moment delayed. Before introducing today's guest and research person, a request to our staff to play the institute anthem as a mark of inauguration in virtual mode as a token of honor to our noble institute. Thank you. Now I feel proud privileged to introduce our today's guest and resource person. Today's chief guest, CMA Dr. Ashish Thate sir, is a fellow member of the institute and a cost accountant of India and a practicing cost accountant, LOH as insolvency professional and independent director. He has done master degree in commerce, doctor of philosophy from Symbiosis International Deemed University. He started his professional career in leading pharmaceutical company, and for his exceptional performance, he has received first Managing Director's Award in hands of Managing Director of the company. He worked as professor in leading management institutions, India Group of Institutions, and associated as visiting faculty in Management College and guest faculty of the Institute of Cost Accountants of India. He has conducted numerous webinars, seminars, and workshops in all three professional institutes at various locations across the country, and given professional talks at outside country also. He is popular for He is popular for appearing on national and local television channels, expressing his views on income tax, GST, and economic matters. He also writes articles for local newspapers and magazines across the country and world. He is also a youngest chairman of Western India Regional Council of the Institute of Cost Accountants of India. Presently, he is a member of Central Council of the Institute of Cost Accountants of India for 2019 to 23 and chairman of Corporate Law Committee for the year 2021-22. Besides all his activity, he is a national and international chess player and has won many medals for individual teams and country as well. He is also internationally rated chess player in India. Thank you, sir. Now our special guest, CMA Niranjan Mishra sir, who is our own and the mentor and advisor, always cooperating us. We all know about him, but just I briefly introduce him. CMA Niranjan Mishra sir is a fellow member of the Institute of Cost Accountants of India and a practicing cost accountant in Bhubaneswar. He is elected Central Council to the 2015 and 19, and again elected for 2019 and 23. Presently, he has taken the professional responsibility as Chairman Committee on Cost and Management for Public and Government Services and member of many committee of the institutes. Thank you, sir, for acceptance of our invitation. Now, our today's research person. Today's research person, CMA CS Aravind Acharya sir, is a fellow member of the Institute of Cost Accountants of India, the Institute of Company Secretaries of India. After superannuation from service of in the capacity of Company Secretary and Executive Director in September 2020 from FIDCOL at around 35 years. Now he is a practicing Company Secretary and Insolvency and Bankruptcy Code 2016 professional. He has also done MBA from XIMB and a law graduate from MCOM with MCOM from Utkal University. Thank you, sir, for acceptance of our invitation. We all are saddened the untimely demise of our Honorable past President CMA Rakesh Singh sir on 28 March 2022 at the age of around 60. We pray before Lord Jagannath to rest his great departed soul in eternal peace and give enough courage and strength to his brave family members and friends to bear his irreparable loss. I request all of you to pray before Almighty and let's stand for 1 minute silence prayer to give last tribute to our beloved past President, late CMA Rakesh Singh sir. Thank you very much. Now, without taking much of time, I would request our Vice Chairman, CMA Santanu Kumar Rao sir, to deliver welcome address.
Thank you, Satyav. Very good evening to one and all who have joined in today's webinar on legal provision of directors. Today's chief guest, CMA Dr. Ashish Thateji sir, special guest CMA Niranjan Mishra, resource person CMA CS Aravind Acharya, past chairman of EIRC and chapter RCM, esteemed members and all the learned participant,
ଏଠି ଶୁଭୁନି ସେତେବେଳେ
Chairman,
କହିଲି ବିଶ୍ୱାଳକୁ ସେ କହିଲା ହଁ ଲାଗିଛି କଣ
Chairman
କହୁଥିଲି
PT
ଶୁଭୁଥିଲା ନା
Committee, CMA Shaktidhar Singh sir, Chairman of the chapter, Himaj Mishra in his absent year, Secretary of the chapter, CMA Sujyanar Mishra, and all other professional friends in the managing committee of our chapter. On behalf of the managing committee and the team of ICI Bhubaneswar chapter, I, CMA Santanu Kumar Raut, Vice Chairman, warmly welcome you all to today's virtual program on the theme Legal Provision of Directors. On behalf of ICI Bhubaneswar chapter, I convey thanks to all the dignitaries for accepting our invitation. I would also convey thanks to CMA Dr. Ashish Thateji for declaring March 2022 as National Corporate Law Month by our premier institute and at Pan India Maximum chapters, regional offices, and also the institute celebrating the same by way of activities and program. The suggested topic by the institute, such as NCLT and the role of CMA, capital market, securities law and SEBI, competition law and CMS, role of independent directors, women directors, foreign inwards investment and overseas direct investment, Companies Act 2013 and its related roles and regulations are indeed very much required by the professionals to update their professional skills. As told by our Shakti sir, this chapter has conducted a seminar on Companies Act 2013, accounts and audit, both in physical and virtual platform, just 2 days before the Corporate Law Month declaration by the Institute. But today, this specific WEBINT has been organized to mark the Corporate Law Month celebration to honor our noble institute. I wish a grand success of today's WEBINT and convey my special thanks to the participants for their continued support. I hope today's sessions will be another learning session for all of us. And now I request Shakti sir to continue. Namaskar to all.
Thank you, Santanu sir, Vice Chairman of the Institute of Bhubaneswar chapter. Now I would like to request CMA Niranjan Mishra sir, please address.
Thank you, Shakti Babu. The chairman of Bhuban chapter, CMA Himaj Mishra ji, in his absence here. Just now he is arrived at the chapter, but he is not in the platform, virtual platform. The vice chairman of the chapter, CMA Santanu Kumar Raut sir, Secretary Sujyanar Mishra sir, CMA Dr. Ashish Thateji sir, the chairman of the Corporate Law Committee, in his absence here. Due to some institute urgent work, he is not in the platform, and he may join at any time. And our knowledge speaker, and he is one of my elder brother, CMA Antarjay Acharya sir. He is the research person today with vast knowledge. You can tell the knowledge of ocean. So he is here to address you on the topic legal provision for directors. The other participants on the platform, the chapter chairmen, chapter managing committee members, students, those are available here, the qualified cost accountants, and my other colleagues. It is a great privilege for me to join this WEBINT as a special guest, because Pan India, the institute is organizing the Corporate Law Month celebration. And last Sunday, 2 days back, we had organized one program at Angul, wherein about 250 more participants have joined, and it's a mega success. Today also, we plan to have it in a physical platform, but since it was a working day, and not possible to invite everybody, and it's also difficult to for everybody to attend physically at the verge of the end of the financial year. So that's why we decided to conduct it in a virtual platform, and good number of participants are here. I am happy to see. Coming to the topic, I am also one of the independent director in one state level PSU, small PSU. But I know the provision part is very stringent. That will be highlighted by Arvind Acharya sir. Very stringent for the directors. That doesn't mean that everything will be put by the employees, and the directors are telling that that is scrutinized by the employees, and we are just betting that what the proposed by the employee. That is not the responsibility of the directors. They have to go into detail. So I have seen in most of the PSUs, basically state-owned PSUs, they have a lot of backlog works in terms of statutory compliance, in terms of accounting compilation, in terms of reconciliation of the subsidiary general ledgers, in terms of not maintaining the subsidiary ledgers, performance report is very weak, and there is no MIS at all, there is no accountability at all. So which needs to be addressed by all the directors, not only independent directors and the board level directors, those are full-time directors. That's why government, as a part of corporate governance and transparency, introduce the independent directors into the board composition, and there they have to play the vital role. So without wasting much of time, I request our chairman of PD committee, Shri Satyajit Singh sir, to invite our resource person, Shri Arvind Acharya sir, to deliver on the topic. And meantime, when our chairman, Dr. Ashish Prasad Thate, will join, and he can deliver. So I wish this program a grand success. Thank you very much. Jai Jagannath.
Thank you, CMA Niranjan Mishra sir, Central Council member. Now I would like to request CMA CS Arvind Acharya sir. Sir, kindly start the session.
Good evening to everybody. Just I want to ask you, am I audible to all of you?
Yes, sir. Yes, sir.
Okay, thank you. So at the outset, I am very much thankful to the Institute of Cost Accountants of India for inviting me to speak on a very important topic, that is the legal provisions for the directors under the Companies Act 2013. And so since I have been given this opportunity, I do not know to what extent I'll be able to discharge my duties, because before me there are so many learned persons. So the Companies Act, as Mr. Niranjan Mishra said, that this is a vast act and very complicated provisions, yes, the changes in the rules and regulations which are happening almost every day, so to say. If you calculate the number of changes being notified by the MCA, it will come to average 1 change per day. So this has become a Herculean task for the professionals. So I will try my best to analyze particularly the provisions regarding the directors. So CMA Niranjan Mishra, CMA Dr. Ashish Thate, and Chairman of the chapter, CMA Himoj Mishra, and CMA Santanu Kumar Raut, Vice Chairman, and CMA Sujana Tripathi, Secretary, and Mr. CMA Singh, Chairman of the PD Committee. So I am very much thankful to all of you for giving me this opportunity. I know that your institute, not your institute, sorry, it is my institute also. And the chapter, Bhubaneswar chapter, is a very vibrant chapter. I know since long. You are doing very well. So today's evening, I'll try my best to do justice for the invitation you have extended to me. So now coming to the chapter, sorry, to the topic, that is the legal provisions for directors. So those who are present here know very well about the different provisions of the Companies Act 2013 It is not new to anybody. But still then, even if when I will speak, you may be aware of all those provisions, but only to have a comprehensive talk on the chapter. So I have to deal with a very small issues also. It may be boring to people, but still then I would request to bear with me. So I will start from very beginning. That a company means only the shareholders and the directors. Employees, okay, will come later. So shareholders and directors, only these two terms we are acquainted with, so per company is concerned. And director has been defined and shareholders have been also defined in the Companies Act. Since we are concerned with the directors, so I will not touch anything about the shareholders. So coming to the directors, the very definition, that is the section 2 and subsection 34, it's a very peculiar definition. It says the director means a director appointed to the board of the company. Only thing that appointed to the board of the company. So if anybody who is appointed to the board, he is a director. We can understand in this way. Then who is a director? It has not been defined directly in the Companies Act. But if we go to the next definition, that is the under section 2 and subsection 10, it defines the board. So what is a board? Board is nothing but a collective body of the directors. Again, the same thing, the directors. So it is a collective body of the directors. And if you come to section 179, there we can get some clue. That is the powers of the board. We can know actually from section 179 of the Companies Act that who is board, what is board. It says the board of directors. It begins with the board of directors of a company, verify, shall be entitled to exercise all such powers and to do such acts and things as the company is authorized to exercise and do. At the very beginning, I have told that we are concerned with or familiar with the two words, shareholders and the directors. So first comes the shareholders, then come the directors, because the shareholders appoint the directors. So shareholders mean the company, and company is entitled to exercise certain powers which has been given under the Companies Act or in the Articles of Association or a Memorandum of Association of the company, if they are not inconsistent with the provisions of the Act. So therefore, this section 179 subsection 1 says that the board of directors shall be entitled to exercise all the powers of a company. So to say, we can say that the board of directors is the apex body of a company. Shareholders hardly take any decision excepting 1, 2, or 3, very few. On very few matters they have the powers, but almost all the powers of a company rest with the board of directors. Now, when we read the board and section 179, it comes to our mind that yes, the directors collectively known as the board, and the directors means a director appointed to the board. If we read the section 149, which is the first section of the chapter 11, which deals with the appointment and qualifications of directors, you can know also very well what it says. Every company will have a board of directors consisting of individuals as directors. Here we came to know that yes, who is the director? Individuals can be director. And the board of directors, every company shall have a board of directors. That is compulsory. And so from these 4 sections, section 2, section 179, section 149, we came to know that yes, the directors are the individuals. Directors collectively known as the board of directors of a company, and the board of directors of a company can exercise all the powers as a company is entitled to exercise and do. And directors means the directors are appointed to the board. If you are not appointed to the board, you cannot act as a director. So with this, we can proceed further. Now, if you actually, I will deal only with the chapter 11, which is concerned with directors. That's from section 149 to section 172. Nothing more than this. Within these 2 hours, I think I will try to cover all these sections. So if we read section 149 to 172, we can start with one statement that there are 8 types of directors of a board in a company. Out of the 8 types of directors, some directors are appointed by the general meeting, by the shareholders in the general meeting, and some directors are appointed by the board itself. So the Companies Act has specified that who will be appointed by the shareholders and which directors will be appointed by the board of directors. But generally, the directors are appointed by the shareholders in the general meeting. That is section 152. It's a very important section. Out of the total sections contained in chapter 11, section 149 and section 142, according to me, are very important sections. So far, the constitution of the board is concerned and the independent director provisions are concerned, and how the directors are appointed, right? So out of the total 8 types of directors, the last 3 types of directors, that is additional directors, alternate directors, and nominee directors can be appointed by the board, and all other directors will be appointed by the shareholders in the general meeting. That is the managing director, full-time director, woman director, small shareholders director, past directors, all those directors can be appointed by the shareholders in the general meeting. Now, I will start from the first section of chapter 11, that is section 149, which says that, as I have already told you, that every company should have a board. And it also says about the minimum number and maximum number of directors to be in the board of a company. So far the number of directors is concerned, the Companies Act has divided the companies into 3 types. One is the public limited company, the second one is the private limited company, and third one is the one-person company, that's OPC. So in case of public company, you know it that the minimum number should be 3, and in case of private limited company, the minimum number should be 2, and maximum will be 15 in both the cases. But in case of OPC, it is only 1 director. So with this, we can proceed further. And if this is the section which has been introduced in the Companies Act 2013, and all the existing companies on the date of the commencement of the Companies Act 2013, they should satisfy this number of directors within 1 year of the commencement of the Act. So this is also provided in section 149. Sorry, yes, section 149, subsection 2. And for the first time, it introduced that at least 1 director of the board should stay in India for not less than 182 days during the financial year. And if any director is not staying in India for not less than 182 days, then at least one of the directors of that company should stay for not less than 182 days. That should be complied within 1 year. So this is also that 1 year time is allowed to the companies to comply with this. So then comes the women directors. Women director actually, that is for a very specific companies, that is for the listed companies, they should have at least one woman director. You can go for more than one, but at least one woman director should be appointed. And in case of other public limited companies, those who are having paid up share capital of rupees 100 crores or turnover of rupees 300 crores, they should also have at least one woman director. And this woman director comes in the category of independent director. So now we have the number of directors in a board and the 182 days stay by at least one director and the woman director. Then we'll come to the independent director. For independent director, section 149 subsection 4 specifies that for listed companies, at least 1/3 of the total number of directors should be independent directors, at least 1/3. And the fraction contained in the 1/3 should be rounded up to the nearest number. That is, if it is 2.3, it should be 3, like that. So for listed companies, at least 1/3 of the total number of directors should be appointed as independent director. And for other companies, that is for the other public limited companies, they should have paid up share capital which should be equal to or more than 10 crores. And the turnover should be equal to or more than 100 crores. And the loans, debentures and deposits taken together should be more than 50 crores. Here you can mark, in case of the first two criteria, that is the paid up share capital, it is more or equal. In case of turnover, it is also more or equal. But in case of the loans, debentures and deposits, it is not equal or more than 50. It should be more than 50. Therefore, these are the very small issues which should be looked into while determining the eligibility of a public limited company to appoint independent director. And the number of independent director in case of public limited company which is not listed is different from the listed company. In case of unlisted public limited company, it will be at least 2 directors should be independent. So in case of listed, it is 1/3, at least 1/3 of the total number. And in case of other public limited companies who fulfills the criteria of the paid up capital, turnover, and the loans and debentures and deposits, they should have at least 2 independent directors on their board. Okay. Now, the tenure of the independent directors. It says that the independent director can be appointed for 2 terms. Each term should be up to 5 years. I will just point out one thing here, that it says up to 5 years. 2 terms means up to 10 years. But the appointment should be twice. First appointment, the term should be up to 5 years, maybe up to 1 year, maybe up to 2 years, like that, up to 5 years, not exceeding 5 years. If suppose Mr. A is appointed as independent director today for 1 year, then he can be reappointed again for the 2nd year. So here, if he is appointed for 1 year, then it is called 1 term. Since it is says that 1 term up to 5 years, it can be 1 year. So if he is again next year he is appointed for another 1 year, that means he is now appointed for 2 terms of 1 year each, which is also in compliance with the Companies Act. You cannot say that, no, sir, he has been appointed for 2 years only. He can be appointed for another 8 years. So this is not correct. So this is a very sorry. I just got a call from the Odisha High Court advocate, so I could not avoid it. Sorry. So we are discussing about the terms, the tenure of the independent director. So if you want to appoint, you appoint the first term up to 5 years, and second term up to 5 years, not up to 1 year, and again another for up to 1 year. But what people are doing, that they appoint in piecemeal basis. Therefore, it is not correct. Hence, we should be careful about this. And after completing, suppose somebody is appointed for 2 terms, but only for 2 years, he cannot be appointed again next year for uh, any period, because there should be a cooling period after the 2 terms. The 2 terms may be 2 years or 5 years or 10 years, but after completing 2 terms, the cooling period will start. And after 3 years of cooling period, he can be appointed again as independent director of the company. But during the cooling period, he cannot render any kind of service to the company in any capacity. That is also prohibited by the Companies Act. Then sometimes it comes to our mind, it's a very complicated thing, as Mr. Ninendra Mishra has said, that particularly about the independent directors. The thing is that who is called independent director? So for our simple understanding, if a director is the managing director, he is not independent. If a director is a full-time director, he is not independent. And the nominee director is also not independent. Nominee director has been defined by the Companies Act. Nominee director means if by virtue of an agreement, the bank or financial institutions appoint anybody, he is coming under definition of a nominee director. Or any director is appointed by the government in a company, then he is called nominee director. So this nominee director, managing director, full-time director will not be treated as independent director in any circumstances. Okay. Then section 149 subsection 6 that talks about the meaning of independent director. So first we discussed that MD, full-time director and nominee director are not independent director. Then what are the qualifications so that a person can be appointed as an independent director? So there is no such qualification prescribed under the Companies Act. What it says, section 149, subsection 6 and clause A, it says that in the board's opinion, if the person is of high integrity and he is having expertise or experience, these 3 terms are found in section 149, section 6, clause A, that he should be a person of integrity, he should have expertise, and he should have experience. So it is, if the board is of the opinion, so it is left to the board. So now we can see what kind of people are taken as independent director because of this clause. And the independent director again should not be a promoter of the company. If he is a promoter of the company, he cannot be appointed as independent director. Not only the company in which he is going to be appointed as independent director, but he should not be a promoter of the holding company of that company or subsidiary company of that company or any associate company of that company. Not only that company, he should be a promoter, but if he is a promoter of the holding company, of the subsidiary company or associate company, then also he is not eligible to be appointed as independent director of that company. So this is very much applicable to the family-owned business or companies where it is very difficult to make this kind of differentiation. And the person should not be related to the he should not only be the promoter, he should not be related to the promoter or director of the company or holding company or subsidiary company or associate company. Because how strict the Companies Act is. So far the independent director appointment is concerned. Firstly, he should not be a promoter. Secondly, he should not be related to the promoter also. That is there. Again, he should not have any pecuniary relationship with the company, not only with the company, but with the holding company of the company, which is the subsidiary company of the company, and which is the associate company of the company. And he should not have any pecuniary relationship with the promoters or directors of those companies. So directly, indirectly, if he is having any pecuniary relationship, he is debarred from being appointed as independent director of the company. During which year? During 2 immediately preceding financial years or during the current financial years. That means 3 financial years. Suppose he is not having any pecuniary relationship during the current financial year. This is not enough. He should not have that kind of relationship during the 2 immediately preceding financial years. That means current year, then before that and before that. That means almost 3 financial years. He should not have this kind of relationship. But again, the Companies Act is kind enough to provide that if a person is getting some remuneration or having transactions not exceeding 10% of his total income, I will again repeat it. First thing, that he should not have any pecuniary relationship. Second thing, the pecuniary relationship does not include or does not cover if he is getting any remuneration, either as any other director or as any other employee, if he is getting any remuneration for the services rendered by him, or if suppose he is a professional, he is rendering certain service, and the transactions for this type of service is not exceeding 10% of his total income. Total income for the year, if suppose the total income, his total income for the year from his own service is 1 lakh. He should not get 10,000, that's a 10% of his total income from that company. If he is getting more than 10%, then also he is not eligible to be appointed as independent director. So far, whatever we have discussed, you see how it is getting complicated stage by stage. How to appoint, to what extent a company would be careful in deciding that to whom it will appoint an independent director. Unless an expert is engaged, I don't think that you will find a person who can be appointed as independent director so easily. Not only he is, but his relatives also. If suppose he is fulfilling that, yes, he is independent. Not only that, his relatives also should fulfill. So what is that? None of the relatives is holding any security in the company or interest in the company, not only the company, in the holding company, in the subsidiary company, and also associate company during the 2 immediately preceding financial years or during the current financial years. Okay. So what is applicable to him? It is also applicable to his relatives also. So if their relatives are holding certain security or interest in the company, then also he cannot be appointed as independent director. Then but one relaxation has been given again in the Companies Act so far as this holding of security is concerned by the relatives. If the relative is holding certain security or interest in the company whose face value yes. So, if his relative is holding any security, he cannot be appointed as independent director, but there is some relaxation given by the Companies Act in the proviso that yes, he can, his relative can hold security or interest up to rupees 50 lakhs or 2% of the paid up capital of the in the share capital of the company or holding company or subsidiary company or associated company. So up to 50 lakhs or 2%, whichever is higher can be allowed. That in that case they can be appointed. And if his relative is indebted, so not only holding security or interest, something more is there. If the relative is indebted to the company, if he has taken any loan from the company or holding company or subsidiary or associated company, or from their promoters or directors, not only from the company or from their promoters or directors, what amount? In excess of 50 lakhs. In excess of rupees 50 lakhs, same the share face value 50 lakhs or 2%, here also 50 lakhs same. During the 2 immediately preceding financial years or during the current financial years. Not only that, not only holding security or interest or indebtedness, third restriction for relative is that the relative must not have given a guarantee or provided any security in connection with the indebtedness of any third person to the company. A third person has taken certain loan from the company, and the relative has given guarantee or security to that third person. In that case also, the person cannot be appointed as independent director. This is the third restriction after security, indebtedness, third is the guarantee also. Then fourth is, if the relative has any other pecuniary transaction or relationship with the company, holding company, subsidiary company or associate company amounting to 2 or more percentage of its gross turnover or total income, singly or in combination with the transactions referred to in subclause 1, 2 or 3, that is with their relatives and all, then in that case also the person cannot be appointed as independent director. The fourth restriction says about the pecuniary transactions or relationships, but with a limit that that should
amount to 2 or more of its gross turnover. The gross turnover of the company or total income of the relatives or the firm or any other person in combination. In that case also, the person cannot be appointed as independent directors. So what I am going to say is that not only you have to look into the eligibility of the person, but also you have to go beyond to look into the eligibility of the relatives also. Then only if you satisfy all these sub clauses of section 149 subsection 6, then the person can be appointed as independent directors. Again, also it says that the holding of share, indebtedness, providing guarantee or pecuniary transaction is not enough. Again, it says that neither the person himself nor his relatives will hold or has already held any KMP, key managerial person, or is an employee of the company, holding subsidiary or associate company in 3 immediately preceding financial years. So again, this is another restriction that if he was already an employee or KMP in the 3 preceding financial years, he is not eligible to be appointed as independent director. Not only he, but his relatives also, if they are holding such kind of posts in the company. And if he or his relatives has been employee or proprietor of a firm, of any chartered accountant firm, company secretary firm, or cost accountant firm of the company who are rendering service to the company or to the holding company, subsidiary or associate company, then also they will not be eligible. Second thing is that if they are the employee or the proprietor of any legal firm or any consulting firm, not only CA, CS or CMA firm, but also legal or any consulting firm, and transaction of that legal or consulting firm with the company exceeds 10% or more of the gross turnover of the firm. If the gross turnover of the firm is 1 lakh and the particular transaction with the company is exceeding 10% or more, then in that case they will not be eligible for appointment as independent director. If it is less than 10%, then they can be eligible, provided they also fulfill the other restrictions which we have discussed. Again, how many conditions are there for a person to be appointed as independent director? It is really a headache for the professionals to determine. Again, it says that he or his relatives, if they hold together 2% or more of the total voting power of the company. Again, it comes to voting power. So if they hold 2% or more of the total voting power of the company, then also they cannot be eligible for appointment as independent director. So you see how much restrictions are there. It is not only that if the board is of the opinion that he is a person of integrity or expertise, having expertise or expertise, that is not. Even if they fulfill that in the opinion of the board, they fulfill those things, but all those things will also to be same. Then, if he or his relative is a chief executive or director of any non-profit organization, NGOs, or any other body, non-profit organization, that receives 25% or more of its total receipts from the company or promoter or director of the company, that holds 2% or more voting power of the company. I will explain it again. If suppose the person or his relative is the chief executive of one NGO or the director of one NGO, and the NGO is having certain transactions with the company, and the transactions, the value of the transaction is 25% or more of the total receipts of the NGO during the year. And this receipt of 25% should be from the company or from the promoter or a director who holds 2% or more voting power of the company. If you have any relationship, if you means the NGO, if the NGO is having any relationship with the company and the relationship is resulting in 25% or more of the receipts, then you cannot be appointed as independent director. Similarly, if you have some transactions, not with the company, but with the promoter or a director of the company, who holds 2% or more voting power in the company. So not only company, but also indirectly. If you have transactions, if your NGO is having transaction with the promoter or a director of that company, and they should hold at least 2% or more voting power in the company. If they don't hold any voting power, okay, it is okay. But if they hold any voting power, that should be 2% or more, and the total transaction value is exceeding 25% or more, then they cannot be appointed as independent director. So these are the restrictions which are provided in the Companies Act under section 149 subsection 6. This is very, very important section. I would say the very, very important subsection of section 149. So if anybody is already a director or wants to become a director, independent director, then they should read very carefully section 149 subsection 6. Then the last clause of section 149 subsection 6, that is a person who possesses such other qualifications as may be prescribed. It is very interesting. As may be prescribed, the rule has prescribed which are the other qualifications. He should have some qualifications on finance, law, management, administration, legal, so which or any other subject which are helpful to the carrying of the objectives of the company. So you have to also see those things, not only this eligibility which we have discussed, but also at the same time, you should also look whether the particular person is possessing these qualifications on these domains. So all these things are required to be seen to select a person for appointment as independent director. Okay, suppose you fulfill all those conditions and you became successful in being eligible, or you are declared as eligible and the company will appoint you as a director, as independent director. Then once you are appointed as independent director, then certain other obligations arise after your appointment. What are those? You have to give your consent. You have to give your declaration. Declaration every year you have to give. What kind of declaration? If suppose when you were appointed as independent director, the circumstance was that you are found eligible. You are not ineligible for appointment. But suppose over the time, maybe after 2 months or 6 months or after 1 year, the circumstances has changed in the sense that you don't fulfill any of this eligibility which is there in section 149 subsection 6 clause A to E, A, B, C, D, E. If you don't fulfill because your situation has changed, then you have to demit the office of your directorship. Therefore, in order to ensure that the independent director has to give a declaration to the company about the change in the circumstance. You should say that yes, the circumstances has not changed, so that I will not be eligible to continue as independent director. So you have to give a declaration to that effect. Just like those who are pension holders, that yes, you are alive, you have to give declaration every year. Similarly, also that yes, you are still eligible. You are not disqualified, so you have to give a declaration. Achha. Not only this, there are certain duties of the duties for the independent the directors or for the directors also, which are there in section 166 of the Companies Act. Besides that, there is a schedule 4 to the Companies Act, which prescribes the code for the independent directors, how they will behave, uh, uh, how they will conduct themselves in the meeting, and what aspect they should look into for the benefit of the company, for the benefit of the stakeholders. All those things have been described in Schedule 4. So in addition to reading the particular section, the chapter, that is chapter 11 of the Companies Act, which deals with the qualifications of the directors, you have to also read the codes of conduct which has been there in Schedule 4 for the independent directors. Okay. Another thing is that I was telling you about the small shareholders directors. Actually, for the first time, the Company in 2013 has made this provision that in case of listed companies only, small shareholders can collectively appoint one of their representative as small shareholder director, and who will be treated as independent. But at the same time, though the Companies Act has introduced this for the first time, but at the same time, the Companies Act has also provided that the listed company may appoint. So it is optional. It is not compulsory. In India, I don't think that any listed company has allowed or is having the small shareholder director in their books, because it is optional. If suppose there is some number that is 10% of the total number of shareholders, or 1,000 number of shareholders which is higher, should give a notice to the company that we want to appoint such and such as small shareholder director. So it is up to the company. The company may say no, and also it is not violating the provisions of the Companies Act. So it is then there. Another situation also arises that that women director must be knowing that many companies who are required to appoint women director in their board have no such director for a long time. But government is not that strict and not taking any penal action. But as you know that the women director is an independent director, and the independent director should be appointed by the shareholders in the general meeting. So it is not the board who can appoint the women directors. So therefore, if you want to pass a resolution in the board of directors, it should be subject to the approval of the shareholders in the general meeting. So you have to call a general meeting. For a listed company, it is very difficult to call a general meeting so frequently. So they wait till the annual general meeting, which is otherwise held every year. So So if the government will come up with the instruction that you should fulfill this requirement to appoint an woman director, so what they do that they take him or her, they take her as additional director in the board, and as you know, the additional director can continue as such till the conclusion of the next annual general meeting. And in the annual general meeting, she is appointed as a regular independent director. And from that date onwards, he can continue up to 2 terms for a total period of 10 years. Suppose she is not regularized, she is not appointed in the general meeting. In that case, what will happen? Somebody else will be appointed as independent, as a woman director, but she will not be eligible to continue after that. So cease on that date if he is not appointed in the general meeting, and she cannot be appointed as any other director of that company. This is the provision of the Companies Act. Independent director will not be issued any stock option. That is prohibited by the Companies Act. And independent director can be paid remuneration for attending the board meeting, and also they can also be paid commission on the profit, but that should be within the limit. The limit is there, which is prescribed in section 197 of the Companies Act. That is, as you know, that total remuneration, managerial remuneration should not exceed 11% of the profit of the company. So the independent directors or other directors can get up to 1% as commission on the net profits. Yes. Now, this is very important to know that what is the liability of the directors. As you know, there are so many types of directors, that is managing director, full-time director, and non-executive director, and also independent directors. Normally, we understand that those who are full-time, those who are managing directors, they are liable for the omission or commission which occur in the company. They are liable. This is the normal understanding. But the Company Act says that independent director who is non-executive and other non-executive director who are not even independent will be held liable for any act of omission or commission which had occurred in the company. Again, it further provides that such type of omission or commission should occur with his knowledge. With his knowledge. This is very broad aspect. Knowledge means what? The Companies Act has also prescribed what is called the knowledge of the independent director or the non-executive director. So, in what way they have the knowledge that there is some omission or commission occurring in the company for which they will be held liable? They should know what is the source of knowledge. If suppose they have not attended the board meeting, what is the source of knowledge? So the Companies Act says that the knowledge should be attributable through the board processes. then the particular director should understand what is the board process. Board process means giving notice to the directors, at least 7 days notice should be given to the directors along with the agenda notes for consideration in the meeting. Whether you attend or you don't attend, that is separate. And if suppose you attend, you participated, fine. But if you don't attend, then also fine. Because whatever proceedings occur in the meeting, the minutes will be sent to all the directors. So if a director, if an independent director or non-executive director does not attend the board meeting, but he receives the notice of the board, he receives the agenda notes of the board, and he receives the minutes of the board. So this board process is completed, and it is considered that he is having knowledge. Therefore, he cannot say that I have not attended the board meeting. He cannot take this excuse. So if through the board process he is having knowledge, then he will be held liable or responsible. Or if with his consent or connivance, or where he had not acted diligently, he cannot say, no, I have no idea, I could not understand actually this is the omission or commission. He cannot say like that, because he should act diligently when the papers will come to him, when the board notes will come to him, or when he attends the board meeting. He should make some inquiry that what is this matter. So he should exercise his diligence to understand the matter. If he is not exercising his diligence and he remains silent, then he gives his consent, or his silence is or amounts to the connivance. So that particular omission or commission has happened with his consent or connivance if he does not exercise his diligence. So these are the things, very important aspects the independent director or non-executive director should keep in his mind. Nowadays, we see that the ministry is taking action against all the directors. And the directors, some of the directors also take the plea that, yes, I have no knowledge about this. But they don't understand what is the knowledge. If they receive the notice, they receive the board notes and or they receive the minutes, they have full knowledge. They can say, okay. So the independent directors or non-executive directors should be very, very careful, particularly nowadays because of this thing. And lastly, the independent directors are not liable to retire by rotation. The Companies Act has provided that out of the total number of directors, 2/3 of the number will be liable to retire by rotation. For example, if suppose the maximum number of directors in a board is 15, and in a company there are 15 directors. Suppose out of 15, if 1/3, if it is a listed company, will be the independent directors, that means 5. So 5, if you will deduct, so 15 minus 5, because they are not liable to retire by rotation. So now remains 10 directors. So 2/3 of 10. So 2/3 of 10 will be 6.67 means 7. The 7 directors will be liable to retire by rotation. And out of this 7, 1/3 will retire at every annual general meeting. Of course, they are also eligible for appointments, but this is the thing. How the directors will retire by rotation, but the independent directors will continue to complete their tenure. And the nominee directors also, you suppose there are nominee directors who are appointed by the banks and financial institutions in government, they are not also liable to retire by rotation. Now we will discuss about the additional directors. How the additional directors are appointed. The additional directors will be appointed by the board, not by the shareholders, and they will hold office till the conclusion of the next annual general meeting. And regarding the alternate directors actually they will be appointed by the board for a director which absence from India for more than 3 months. Then the board can appoint one alternate director. And the nominee director can be appointed by the board when it is appointed by the banks or institutions or the government. So these are the three I have said at the beginning. These are the three directors who can be appointed by the board. But only thing that in case of nominee director, one should ensure that the articles of association provides for appointment of such directors. Normally, we see that there is a clause in the articles of association of each and every company for appointment of nominee directors, because everybody will take loan from banks and institutions. And in case of government company, it is obviously there that the government appoints the nominee directors. So these things are to be also looked into in companies, that there are certain things which they are allowed to be provided in the articles of association of the company, but they should not violate the provisions of the Companies Act, but they can have some liberty to make provision in their articles of association. The Company Act has allowed it. Okay. Then we discussed section 149. I think we have completed section 149, which is most important section under chapter 11. Then next section is section 150. That is how the independent director will be selected. We have also discussed something about this while discussing section 149. And some authorized institutions are maintaining a data bank. You can take the name from the data bank, but it is not compulsory. You can choose your own independent director, and you can give the name of such independent director to the agency for the purpose of maintaining the list of independent directors. So this is there in section 150. Section 151 that speaks about the small shareholder directors. I have already discussed about this, that it is optional for the listed company. And who is called small shareholder? The small shareholder should have the should hold a share capital of 20,000, or less than that, maximum 20,000. So they will be called as small shareholders. Then 152, section 152, that the most important section also under chapter 11, that speaks about the appointment of directors. I have already also discussed about this, that they should be appointed in the general meeting. And who will be appointed by the board, that also we have discussed. And those who will be appointed under section 152, if you remember that 2/3 of the total number, excluding the independent director and nominee director, they are appointed only in the general meeting. So So those who are appointed in the general meeting, we can say that they are liable to retire by rotation, not anybody else. So that we have also discussed about that. And how the independent director is appointed in the general meeting, and what would be the tenure, what would be his remuneration, and what would be his eligibility criteria. All these things we have discussed in detail in section 149. Then 153, 154, 155, and 156, 157, 158, 159. 3, 3, 6, 7. 7 sections speaks about the DANE, Director Identification Number. So if somebody will be appointed as a director, then he should get DANE from the MCA. And only one person can get only one DANE. But when initially this DANE system was introduced, it was found that so many people are having more than one DANE. So they surrendered the DANE, and only one DANE is issued to one person. And a DANE is only issued for once. It is not issued on many occasions, but it should be activated. It gets deactivated, it should be activated. Directors should go for the KYC of the directors. And you have to apply. Section 153 says that the particular director should apply for the DANE. Then only the MCA can allot you the DANE under section 154. And once you are allotted the DANE, then you have to intimate to the company that this is my DANE, and the company will inform the DANE to ROC. So it will be recorded in the ROC also that you have this DANE. The director should indicate the DANE everywhere he signs or executes any documents, which will indicate that yes, he has been allotted a DANE and he carries the DANE. Then, if suppose you made some default under section 152, if the company will make some default under section 152, 152 says about the appointment of directors in the general meeting. 155, that is, if you get more than one DANE, and section 156, that the director, if he does not intimate to the company about the DANE allotted to him, then there is penalty. Section 159 talks about the penalty for violation of section 152, 155, and 156. The penalty is up to 50,000, and if the default continues, then it is 500 rupees for each day after the first default. So therefore, some people, they don't have any idea about the Companies Act provisions. So if any professional is having, okay, the professionals should have the knowledge. So they should guide the directors who does not have the knowledge about the Companies Act. You see, unnecessarily he will be punished by the MCA. If he fails to get the DANE, or if he gets the DANE, he does not give it to the company, and he gets more than one DANE. He has forgotten whether he has got the DANE, or he may think that yes, I have got 10 years back that DANE might be good, let me apply for another DANE. So like this, so if he does this unknowingly or innocently, also he will be punished. Therefore, it is better for everybody who is going to be appointed as a director should know at least these provisions which are applicable to him. 161 says about the appointment of additional director, alternate director, and nominee director. We have already discussed about those things. And 162 says about appointment of directors to be voted individually. For each individual director, the company should pass one resolution separate. And 163 option to adopt the principle of proportional representation for appointment of a director. So if your articles of association provides for this type of appointment of the directors to proportional representation according to the amount of paid-up capital you hold in the company, then you have to adopt that procedure for the appointment of director. Otherwise, by simple majority, you can appoint, or wherever special resolution is required for appointment or for reappointment. You see, I have forgotten to tell one thing, that a director is appointed in the first term up to 5 years. And after that, after expiry of the 5 years, the director is also eligible for appointment for the next term of another 5 years. But in the first term, the appointment would be made through ordinary resolution to be passed by the shareholders in the general meeting. But the second term appointment should be through special resolution. Okay, so that is required for this second term appointments. Then section 164, which is a very important section, that is the disqualification for appointment of directors. What are the disqualifications? You might be seeing that so many directors have been disqualified recently by the ROC for non-filing of the balance sheet of the company. So this has played havoc among the corporate sector, and a lot of difficulties they have faced. So they do not know actually that the directors, 90% or around that, the directors do not know actually what are the grounds for disqualifications. So therefore, it is very important to know what are the grounds for disqualifications. That is section 164, very popular section, and it contains it contains some normal disqualification, that he is upon sound mind, stands so declared by competent court, he is an on-discharge insolvent, he has applied to be adjudicated as an insolvent, and he has been convicted by a court of any offense, whether involving moral turpitude or otherwise. All those things are there, and an order disqualifying him for appointment as a director has been passed by a court or tribunal, and the order is in force. He has not paid any calls in respect of the shares of the company held by him. If the director has been allotted certain shares and the company has issued a notice, that is the call notice. If the company has not issued any call notice and he has not paid the money, that remains unpaid, he cannot be said that he is disqualified. But provided the company has issued the call notice and the time has been given to pay the money, to call money, and within that time the director has failed to pay, then he is disqualified. And he has been convicted of the offense dealing with the related party transactions. He has not disclosed his relations with any entity or with respect to any transactions which is entered into by the company, and that is under section 188 of the Companies Act, then also he will be disqualified. And he has been convicted of the offense dealing with related party transactions anytime during the last preceding 5 years. You see, such a long time. So the preceding 5 years, it will be also seen if he is convicted. Today he is now convicted because he has not disclosed his interest during the last last 5 years, the company has made certain transactions and disclosed it, which we have read that he should, once he is appointed, he should disclose the change in the circumstances to the board every year. Then in that case, he will be disqualified and he will be removed from the board. The most popular section, not section, subsection, that is 164 subsection 2, which is a very draconian section, and it is the most talked about section recently. It is not recently, within the last 2-3 years, on the basis of which so many directors have been removed from the board, or they are not acting, or they cease to act as director. That section 164 subsection 2, very, very important. No person who is or has been a director of the company, Mr. A is the director of a company. That company has not filed financial statements or annual returns, that is AOC 4 and MZ7, which is filed every year. For any continuous period of 3 financial years. You see the wording, for any continuous period of 3 financial years, not the previous. It says any continuous period of 3 financial years in any block. If for continuously 3 financial years, the company in which you are a director, or suppose in that year you were a director, but now suppose you are not, but because it says no person who is or has been a director and of the company, and the company has defaulted in filing balance sheet or annual return with the ROC for any continuous period of 3 years, 3 financial years, or the company has failed to repay the deposits accepted by it or pay interest thereon, or to redeem any debentures on the due date, or pay interest due thereon, or pay any dividend or declared, and such failure to pay or redeem continues for 1 year or more. It's very, very difficult actually. If you if you have received any public deposit and you have not paid it, if you have issued debenture, you have not paid it on due dates, and if you have declared dividend but you have not also paid it. So, and that default continues for 1 year or more, then you will not be eligible to be reappointed as a director of that company or appointed in other company. So reappointment of that company which is making this type of default, you cannot be reappointed. You may continue as a director of that company, but you are not eligible for reappointment, which is otherwise available to every director under the Companies Act. That a director retires and he is eligible for reappointment. But if this situation happens in the company, then that person will not be eligible for reappointment. He will never be reappointed. And also, he will not be appointed in other company for a period of 5 years. For a period of 5 years. From the date on which the said company fails to do so, fails to refund the deposits, repay the debentures, and also pay the dividend declared. And this default continues for 1 year or more. So from the date of default for next 5 years, the particular person who is a director or who has been a director cannot be appointed as a director in other companies, and also he cannot be reappointed in the same company. So this is very, very important section 164 subsection 2. 164.2, we say in general 164.2. He has been disqualified under section 164.2. So everybody understands what is 164.2. It is so popular. A private company may provide for any disqualifications for appointment as a director, in addition to those already we discussed. A private company can have more disqualifications that is allowed, and it can have in its articles of association that on these grounds also he cannot be appointed as a director or he cannot be reappointed as a director. So because it is a private limited company, they will look to the interest of the company. They will not look to the interest of the directors. If he does anything which is detrimental, the private company can provide in its articles of association those grounds for declaring a particular director as disqualified. Then comes another very important section, 165. 165 says about the number of directors you can have. You see, many directors are appointed in many companies at the same time without knowing what is the limit for their directorship. The limit is maximum 20 directors. That means in 20 different companies, they can be director. Out of these 20, 10 should be in public limited companies. If they are director in public limited companies, that should be limited to 10. And if you are director in section 8 company, that is not counted for the limit of 20. So that is excluded. Okay. So we have to be very careful. Suppose we are director of 12 companies, but we are director of 11 public limited companies, then it is also violating the Companies Act. So action will be taken in that case. So you have to relinquish at least the directors of one public limited company within a period and within a certain period of time, that is period of 1 year, you have to quit. Otherwise, the ROC can initiate proceedings against the particular director for exceeding the limits fixed by the Act. Okay. Then coming to the duties of the directors, that is explained in section 166 of the Companies Act, and that he should act in good faith, that he should look to the interest of the company, and he should exercise his duties with a due and reasonable care, skill, and diligence, and with the transparency also adapting or adapting the corporate governance practice, disclosing the interest, withdrawing himself from any matter in which he is interested. So like that, these are the duties of the director. And the director should not assign his office because he is expert, he has been taken as a director. So he cannot assign his office of director to anybody else. That is prohibited in the Companies Act. If he assigns that his directorship to somebody else, then it is void. It is not possible. Yeah. Then section 167 talks about the vacation of office of a director. When a director will vacate the office, the vacation of the office of the director is explained in section 167 of the Companies Act, and the particular director will vacate the office if he incurs any of the disqualifications which we have already discussed under section 164. 164, that is the disqualifications of the directors, that is he becomes on sound mind, convicted by court. And the next important subsection is subsection 164, subsection 2 for non-filing the balance sheet and all. If he incurs all these disqualifications, then he will vacate the office immediately. And not only that, we can remember what we have said in section 164 subsection 2, that he will not only vacate the office in the company who is makes the default, but also he will vacate the office of directorship he is holding in other companies, even if those companies have not defaulted under section 164 subsection 2. That is, they have filed the balance sheet and annual return on time. Still then you have to vacate, because where you are already director of the company, and that company has defaulted in filing the balance sheet, and you not raise because they have not audited. It is not seen very frequently. Some directors never attend the board meeting. In earlier Companies Act, they used to send a request for leave of absence. But in this Companies Act 2013, that is not available. If you remain absent, whether with a leave of absence or without requesting for leave of absence, that does not matter. If you remain absent, from all meetings of the board of directors held during a period of 12 months, with or without seeking leave of absence of the board, so that does not matter. You cannot take the plea out. I have applied for leave. I was not well. I could not attend. So that plea is not accepted. You have to attend at least one board meeting held during the period of 12 months. Not in a year, but during the period of 12 months. So if you have attended today, then 12 months, within 12 months, you have to attend another board meeting. Otherwise, you have to vacate automatically. And if you have contravened the section 184 says about the disclosure of interest in contracts in which the company in which you are interested, and you have not disclosed it, and later on it came to the knowledge of the company. In that case, you have vacate the office. Okay, that is section 184. Every year you have to disclose your interest. You have to give the disclosure of interest to the company in which you are a director, or if you are holding any share in the company, actually 2%, then you have to disclose it. Otherwise, if subsequently the company makes any transactions with those kind of entities, and subsequently it is known that you are interested, then you have to vacate the office. So this is also a very important aspect for the director to know, that where the company is making any transactions in any of your related entity or related parties. Then other things are there, that if they are convicted by any court or tribunal also, they cannot continue to hold the office. Then we'll come to section 168, that the resignation of the director. A director can resign anytime. He will send the resignation letter to the company, and also he will also intimate to the ROC about his resignation. And in the resignation, he should mention the date from which he wants to resign. And your resignation will be effective from that date, as mentioned in your resignation letter. If you don't mention, then the board can accept the resignation, and from the date of acceptance, it will be effective. And necessary resolutions will be passed by the board of directors for the resignation, for accepting the resignations, and the necessary forms will be filed with the ROC, so that the ROC will keep a record about the cessation of the director from the board of the company. Another section is section 169, which is also equally important. And nowadays, many applications, petitions are filed before the NCLT under section 169 of the Companies Act. This talks about the removal of the directors. You can cease to act as directors. You can give a resignation to the company not to act as a director, or you can vacate the office of director on of certain events. In addition to this, you can also be removed before expiry of your term, but it is a critical procedure. The Companies Act has provided a procedure which will be followed. If the if a particular director is to be removed from the board for the reason to be specified, then the company by ordinary resolution remove a director before expiry of the period of his office, after giving him a reasonable opportunity of being heard. That means before removing the particular director from the board, the particular director should be given an opportunity. That is the natural justice. That why he is going to be removed. And he will be given the scope to make his representation to the company. And this removal is to be approved by the shareholders in the general meeting. And his representations will be read out in the general meeting, or his representation will be circulated to the members, so that everybody before voting will be knowing about the representations, about the grounds for the removal. So this is a procedure which has been prescribed by the Companies Act. So a special notice is to be required. It is called a special notice. Is required for removal of a director or to appoint somebody in his place. Either you can remove him, or at the same time you can remove as well as you can appoint somebody else in his place. And for that you have to give a special notice, and the notice will be given to remove the director, and the director concerned will be intimated about the special notice, so that he will be given an opportunity to make a representation to the company. And after receipt of the representation, the company will send a copy of the representation to the particular director, or if the time is short, then it can be read out in the meeting itself. And the particular director, even though he is not a shareholder, is entitled to attend the meeting of the shareholders in this particular situation. And and after doing all these processes, completing all these processes, and the matter is put before the EGM of the shareholders, and the shareholders will approve it, then he is removed from the board, and the company will file the necessary form in DIR 12 with the rest of companies within 30 days. And the registered companies will approve the DIR 12, and the director will cease to act from that date as director in the board of the company. So this critical procedure is to be submitted. It is to be followed. But the director, if he is aggrieved, he can go to the court of law that I have been removed without any grounds, and with malified intention, some shareholders have given the special notice to remove me. So, and ample opportunity has not been given to me as a matter of natural justice. So on these grounds, the particular director can take shelter of the court of law, and if it is decided either in his favor or against him, accordingly he will either continue or he will discontinue as a director from the board of the company. Then only 3 sessions are left. Then I will finish my deliberations. That is section 170, 171, and 172. Section 170 is regarding the maintenance of register of directors and key managerial personnel and their shareholdings. So this is to be maintained by the company. Who are the directors? Who are the key managerial personnel appointed by the company? If they hold any shares, that should also be indicated. So these are the
Sir, not audible, sir.
things to be maintained and documents about that within 30 days from the appointment of, if there is any change which is taking place, if there is some change. Am I audible? Am I audible? Am I audible?
Yes, sir.
Yeah. Okay, thank you. So the company has to maintain this register and also to file all these particulars with the register company within 30 days. If there is any such change in the directors or in the KMP, then within 30 days of such change, the company should file the particulars with the ROC, because the ROC is keeping a record of all those directors and KMP as provided under the Companies Act. So if you don't file it, then the particular director particulars or the KMP particulars will not be found in the NCA website, and legally you cannot claim to receive any notice or anything else from the company. So it is very important that the company should be very responsibly file these things with the ROC. 171. That is the members. It's the right given to the members to inspect. So the register kept under subsection 1 of section 70, just before this, we discussed about the register to be maintained, entering the particulars about the directors and their shareholding. So that register is open to inspection to members. And this will be open during business hours. The business hours. That is okay, but the members have the right. You cannot deny to any member that you cannot inspect. Therefore, it is very, very important. You see, from this point of view, if you read both the section 170 and section 171, then you can know the importance of maintaining the register. So if you say I am the director, but there is nothing entered in the register, and a shareholder or a member wants to inspect it, and he will not find your name, then I think if any inspection is also refused by the company, or if any copy required under that clause is not sent within 30 days from the date of receipt of such request, the registrar shall, on an application made to him under may order immediate inspection or supply of the copies required thereunder. The company, if refuses, then the remedy is that he can approach the ROC. ROC will pass order, and you have to allow the particular person to inspect. So therefore, it is very many companies neglect the maintenance of the register of the directors, and if they want to maintain and they really maintain it, but they forget to make entries about the changes also. So this is very, very particular. We should not lose sight of this aspect because it is open to inspection by any member. Then the last section is the punishment section. It is also equally important that we should also know at what peril we are allowing ourselves not to know about the different provisions relating to the director's appointments. So it is our own peril. So therefore, if we should not be happy that I am the independent director of some companies, I am the director of some companies, of so many companies. No. So you should also at the same time know about the provision of the Companies Act for punishment. So section 172, that is the last section of this chapter 11. It says that, I'm just reading out from the book so that it will be more clear. If a company contravenes any of the provisions of this chapter, section 149 to 171 of this chapter means chapter 11, and for which no specific punishment is provided therein. We have read so many sections under chapter 11, section 149 to 171, besides 172. And in one section, the punishment is provided. So it says that if a company contravenes any of the provisions of this chapter and for which no specific punishment is provided, then punishment under this section will not be applicable to that particular section. So if suppose any section of the chapter 11 provides for punishment, then besides that section, the punishment provided under section 172 will be applicable to all other sections of the chapter. The company and every officer of the company, if they contravene any provisions of chapter 11, any provisions, we studied about so many provisions. If any provision is contravened, what is the punishment? The punishment is the company and every officer of the company who is in default. The director comes under officer in default. So we can say for our specific discussion that a company and its director who is in default shall be punishable with fine. What is the amount? Which shall not be less than 50,000 rupees. Minimum 50,000 rupees or more than that, but which may extend to 5 lakh rupees. So if the company contravenes, the company is to be punished and the officer in default will also be punished, and the officer in default includes the director. So the director should always ensure the compliance of the Companies Act provisions. So this is the added responsibility of every director to see that the company complies with the different sections and proviso of the Companies Act. Therefore, every company either declares the company secretary as the compliance officer or keeps a separate person as compliance officer. The compliance has become so strict, and a non-compliance is playing havoc on the company, on the directors, and on the KMP. So we should be very watchful on the compliance aspect of the Companies Act. And it is very difficult to keep a watch on the various provisions because because of the frequent changes which are being made by the government so frequently, and so many acts are there which we deal, it is impossible to keep in touch with all kind of the changes which are being happening. So therefore, it has become a very Herculean task for all of us, for the professionals, to be always on the toe, to keep ourselves aware of all those changes. So unless we communicate with each other, unless we discuss, unless we attend seminars, and unless we listen to people who have authority on the particular subject, then it is very difficult to really carry out the job as professional, because the government has given us the license to become professional, whether you become a chartered accountant, a cost accountant, or a company secretary. But everybody is a professional in his or her own field. And if we fail to discharge the duties of being a professional, then I think we'll not do justice for the corporate sector, for the stakeholders, and also for ourselves. I think I was given some 2 hours time, and I have, I think, reached the time. Should I stop here?
Yes, sir. Thank you very much.
Okay, so I must be thankful to all of you, and I see there are so many professionals who are senior to me. So through this virtual webinar, I pay my regards to all my seniors. So during this COVID period, it has not become possible to attend physically all the seminars. So we don't see even each other for the last 2.5 years. So through this, I pay my regards to all the seniors. And also, I am very much thankful to the chapter for giving me this opportunity to speak on a very relevant topic, contemporary topic. And I do not know to what extent I have been able to fulfill your expectations. So I'm thankful to you for the time you have spent, and also for listening me with patience. And I beg apology if I have bored you. And if opportunity is there, we can also meet physically. So with this, I conclude my deliberations, and with the permission of the organizers, if you have any question answer session, then also I'll be happy to answer. Thank you very much.
Okay, sir. Thank you, sir. Now the platform is open for interaction. If anyone have any query, please unmute yourself and directly ask or put your question in the chat box. There are only one question in chat box, that who are not liable to retire by rotation.
Yeah, I have already told that the independent directors, nominee directors, are not liable to retire by rotation. And particularly, you have to see if the directors are appointed under section 152 in the general meeting. Basically, that is the acid test, which we understand, that is the acid test. If a director is appointed in a general meeting, then he is liable to retire by rotation.
Sir, my question is,
yes,
whether sir, in how many companies independent director can act, and what is their remuneration? Yes. Sir, may I repeat?
So if you go to section 197, then 1% will be the overall managerial remuneration for the directors who are not managing director or a full-time director.
But in how many company a person can act as independent director?
Independent
In how many
director.
companies?
Independent, you see, if you go for director, then it is, as I have told you, it is 20. And
Yes.
in public limited companies, maximum is 10.
Yeah.
So this is the overall.
But independent director, sir.
Yes, according to this,
And
because
sir,
independent director is also a director.
No, he can act in 20 company.
Independent director, yeah, I think
Yes.
so. Yes.
He can act in 20 company.
sir, his
There is no such
question
restriction as far as I know. In how many companies he can be appointed as an independent director?
yes, yes.
Yes. So this is the question.
Yes.
So
Yes.
if so if you are a director in more than 20 companies which is restricted, so you can be director in 20 companies, out of which 10 should be public limited companies.
Sir, my next question is, what is the civil liability and what is the criminal liability for contravention of the provisions? For any
There are
contravention,
you see,
is there any criminal liability?
Yes, there are certain sections. Of course, there were so many sections for criminal punishment, but so many sections have been decriminalized recently. But still, there are certain sections. But we have to put together that which are criminal punishment like imprisonment. So we have to go to the particular section. So I cannot say right now about the particular section which attracts the criminal liability.
Thank you.
Anyone have any question?
Hello.
Devashish sir.
Hello. Hello.
Hi sir, audible sir.
One thing, Acharya sir, I want to say that your directors appointed by directors, section 161. I think
Yes.
you might have left section 161, subsection 4. That is appointment of director in casual vacancy.
Casual vacancy, okay. Yes.
It is not 3, it is 4. So far my knowledge concerned.
Yes, sir. That's the casual vacancy.
Subsection 4 is casual vacancy.
And also there are certain intermediate vacancy also. Intermediate vacancy, there is some difference between intermediate vacancy and casual vacancy. Actually, in case of casual vacancy, what you know, suppose there are, as you know, that 1/3 of the total number should be the independent director. If there are 15 directors and independent director is coming to 5, and if one of the independent director vacates the office, then it comes down to 4. So that 4 means it is less than the limit. So you are violating. You are not. You have to appoint another independent director. So this is called intermittent vacancy. Suppose you have 6 independent director and 1 resigns, then it comes down to 5, which is under the. So it is called casual vacancy.
We may 6, but whether 6 is required or not. Suppose in the case of listed company, 1/3 of the. Suppose our total director 15 maximum. So 1/3 means 5. So 6 that is extra. That is not required.
That is not required. Suppose there are 6 and one of the 6 retires or resigns, then it is still 5. So you are fulfilling.
That is
so it is not required. Yes. So it is not required to fill up that vacancy. But if 2 directors resigns, it comes down to 4, then that becomes intermittent vacancy. You have to at least fill up 1 to fulfill the criteria of 1/3.
No, whether it is, I think it will attract 161 subsection 4. Whether it will
Yes.
be casual vacancy.
No, no. If it is within 5, it will not attract the casual vacancy.
Casual vacancy, because it will, they must be appointed by the shareholders.
They will be appointed by the
They might
shareholders.
he may be another one. Suppose your requirement is 5, but one has been
Yes.
died or like that. 4.
Exactly.
Oh, so he should be appointed by the shareholders as
But-
per independent director's rule.
Yes, exactly. You are right.
Okay, thank you. Okay.
Thank you, Devashish sir. Okay. There is no more questions, so we'll go for closing. Thank you all for nice participation and interaction. We have received a message from our chief guest, CMA Dr. Ashish P. Thate sir. Due to some urgent work, he is traveling and could not join. Then I, on behalf of the managing committee and the entire CMA fraternity of Bhubaneswar chapter, extend an earnest thanks and deep gratitude to our research person, CMA CS Aravinda Acharya sir, and special guest CMA Niranjan Mishra sir for acceptance of our invitation and enlighten us about the various legal provisions of directors. Thank you, Acharya sir, for your passionate deliberation.
Thank you.
I would also like to convey my special thanks to the entire team of ICI Bhubaneswar chapter for their support and effort. I convey my joyful thanks to all the participants for their continued support and cooperation and nicely interaction. Thank you all again for your cordial cooperation and continued support. I also thanks to the officers of ICI Bhubaneswar chapter. With this, I hereby declare the closure of the WEBINT. Pray before Almighty for all your good health. Stay safe, stay healthy. Good night. Jai Jagannath. Namaskar.
Thank you.
Namaskar. Thank you, sir.